talking to you through this headset right now. So give me a heads up, give me a thumbs up if you can hear me, give me a thumbs down if it's not loud enough. I'll do what I can to turn it up as high as possible. Hey, Hillsy, Phoenix, it's good to see all you guys and girls. It is a fun day. What's going on, Tank? D-Dog, thanks for joining me. I just got back from the local credit union. Thanks, Greyhawk, I appreciate that. I'm getting thumbs up, people saying loud and clear. Just got back from my local credit union. As you guys know, I left all the big banks and ISDA banks a long time ago. I do not feel that my money is safe whatsoever in big banks, mainly because of the massive amounts of derivatives contracts and huge liabilities that go along with them. The reason I was at my local credit union is because I was making another money transfer. I made another wire transfer to one of my brokerage accounts so that I could buy more AMC. AMC is at a great price. Definitely looking to pick up a lot more call contracts as well. But yeah, as I just stated, I'm selling my house. We're under contract. The inspection and the appraisal and everything's already gone through. And I'm out of here. I'm happy to say that I'm leaving Illinois, but it's probably not for the reason that most people expect, even though Illinois is going down the shitter quickly. Decided to sell my house to move somewhere more conducive to the hiring of several hundred employees for Xchange. Xchange is a soon-to-come broker-dealer that we're working on right now. And I'm on my way to Dallas. Watch out Fidelity, watch out Schwab. Here comes Xchange. So we're still in the development phases. We're currently working on receiving our licensure from FINRA. And I'm very excited to say that we're gonna poach your best employees. Where I live now, in the far suburbs of Chicago, it is not conducive to hiring several hundred tech and finance employees, financial advisors, customer support people, tech support. So yeah, my family and I are on our way to Texas here next week. Closing is scheduled for next week, and I can't wait. Let's just say that the wife wasn't exactly thrilled about selling our home because she loves our house here, but Xchange and creating something new for retail investors in which they're not getting constantly screwed over by payment for order flow and their orders getting front run by market makers that are running orders through price distorting dark pools and trading shares over the counter is worth it. Making a stock brokerage firm where I feel my children can trade and their trades actually make a difference in the stock price is worth it. Helping stop the nefarious practices on broker dealers constantly resetting failures to deliver via the Reg Show threshold securities list and playing this shell game with failures to deliver is worth it. So I'm on my way to Dallas, and Fidelity and Schwab, you better give your employees a massive raise and some good benefits because we're coming to poach your best talent. If you guys want more information, by the way, you can go to www.litexchange.com, litxchange.com, and you can input your email address there for more information on our beta testing program and our founders program when we launch. So I'm on my way to Dallas, baby. I'm definitely looking forward to it. That being the case, we are planning on launching in the United States to begin, and then we will expand across the world in due time. But first things first, our Founders Program. We're going to be offering retail investors the opportunity to own a piece of Xchange. Imagine what your investment might be now if you had purchased a piece of, say, Fidelity or Schwab or E-Trade or any of these others before they became multi-billion-dollar companies. Because there's no doubt in my mind that in due time, that Xchange will also become a multi-billion-dollar stock brokerage firm with billions of dollars in assets under management. And we have no intention of using Robinhood's payment for order flow, what shall I call it, business model, because that's not conducive to saving retail investors money. Retail investors in 2020, Robinhood in 2020 was sued by the Securities Exchange Commission and charged with a $65 million fine for illegal practices and lying to retail investors. They found that Robinhood had cost retail investors over $34 million in commissions, basically through the use of poor execution and running their orders through payment for order flow. Commission free has never been truly commission free. They just hide it from you. They just don't tell you how much you're actually paying per trade. I think it's about time retail has a stock brokerage firm that's actually looking out for them, that automatically routes orders through lit markets and much more. That being said, I can't fucking wait to give you guys more information, but I just can't right now. I will say this about running back to the stock market. AMC is currently reaching a parity with APE shares. As I told you guys over the last year, that when APE to AMC conversion is finally approved, it will be a 1-to-1 conversion, and we have been proven correct. There's also a 1-to-10 reverse splitting coming, which will not steal anybody's shares. You're going to hear some shills talking about, I'm losing 90% of my shares. Well, no, you're not losing shit. As a matter of fact, their shares are being consolidated. So even though you will go from having 1,000 shares to having 100 shares, they will also increase in value 10 times. It's like having a single $1 bill. It's like having a single $10 bill, or like having 10 singles. At the end of the day, it's $10. And I'd rather have a $10 bill than 10 singles. It's really simple as that. If you look at AMC right now, the cost to borrow this morning was around 350%. And then a few hours later, the cost to borrow exceeded 450%. And then 550%. And then 650%. And if you look at it right now, about an hour before market close, the AMC cost to borrow is over 700%. Why? Why is the AMC cost to borrow skyrocketing? Well, my friends, that's because in order to get the stock price from $5 a share of AMC to $3.50, market makers and short hedge funds and family offices had to short the shit out of AMC, even more than they already have. There are 0 shares left to borrow on IBKR, Interactive Brokerage, because they have borrowed every fucking share possible. Just leads me to believe that my due diligence over the last 2.5 years has been absolutely correct. Because all signs point to the fact that we're going to be so fucking rich. AMC's price had to be pushed down to remove the arbitrage between APE shares and AMC shares, just like we've been saying would happen over the last year. If you're saying you'd rather have singles during a short squeeze, I think that's absolutely asinine, because the total number of shares available on the float will also be reduced by 10. Instead of 1.5 billion shares of AMC and APE, there will only be 150 million shares of AMC. That will make share locates much more expensive and harder to actually locate. That will make the cost to borrow much higher. That will make volatility through the roof with 10 times fewer shares at a 10 times higher value. Nobody's losing 90% of their shares. They're being consolidated, and your price the value of your account remains the same. Damn. I'm standing out here on a nice rainy day in Chicago, enjoying my last days here. And I could not possibly be more excited for what's happening with AMC and Ape and with Xchange. This is almost surreal to think that something that we've been working on since September of 2021 is finally coming to fruition. We're going to bring retail, the only stock brokerage firm created by retail investors for retail investors. And we're going to shake up the fucking brokerages. We're going to shake up the entire financial industry. And I can't wait to see what happens. Especially as more shares of AMC and Ape start to trickle out of companies like Robinhood and Webull, Fidelity and Schwab, where they're being traded on price distorting dark pools and over the counter, and get put into a broker dealer in which purchases go directly through lit markets. It's going to be a wild ride. In the coming days, Adam Aron has just yesterday night released a new letter to retail investors, in case you didn't know. And that letter states that over the coming weeks, over the next 2 weeks, AMC will be proceeding with the conversion and the reverse split. And then they're going to issue shares on the market. And in January of 2021, when AMC issued shares on the market, the price went from around $1 and change to over $12. That's a 1,200% plus increase. And then in June of 2021, when AMC issued 11.55 million of shares in a dilution, if you will, they raised over $2 billion in liquidity. And that 11.55 million shares that AMC sold caused the price of AMC to go from $10 a share to $79 a share over a period of 5 days. In one day, specifically June 2nd, 2021, when AMC sold the bulk of their shares, the stock price of AMC went up from $30 a share to $79 a share. And only when AMC stopped selling shares did the stock price begin to come down, as market makers and hedge funds and family offices began to run the remaining orders through dark pools and over-the-counter trades in order to suppress the price, in addition to naked shorting, marking shorts as long, shorting the stock further, rehypothecating shares, and so on. To say that I'm excited about AMC doing a reverse split and a conversion and issuing shares on the market again is an understatement. An understatement. If you guys look at a company like Dry Ships, look at what happened to DRYS in 2016. Because I was invested in Dry Ships as their stock price rose 1,500%. I remember looking at my phone with absolute glee every single day during pre-market, during market hours, and after hours, as the volatility was absolutely insane. It was the most fun I had ever had on the stock market at the time. And what did Dry Ships do? They did not one, but two. Not one, but two reverse splits. And those reverse splits reduced their numbers of shares greatly, which also led to even more volatility as shorts were squeezed. And Dry Ships didn't have 4 million retail investors. They didn't have 4 million retail investors that owned 85% of the float. Dry Ships didn't have 27% self-reported short interest. Dry Ships didn't have the positive earnings that AMC has. Volkswagen in 2008 was owned around 55% by Porsche. And around 15 to 20 days after the worst day, one of the worst days in S&P 500 history, Volkswagen ran from, what started at $15 a share to $1,000 a share on an agreement to let short hedge funds and family offices off the hook, making Porsche and Volkswagen specifically, the world's biggest company in terms of market capitalization. Don't take my word for it. Just Google it. Look up Volkswagen squeeze. Look up dry ships squeeze. I want my fucking money, and I'm not leaving until I get paid. I'm here for billions with a fucking S. I'm not here for a short squeeze. I'm here for a MOAS, for a mother of all short squeezes. And I don't really think that the MOAS will occur from AMC issuing shares, although I do believe that a short squeeze is highly likely and highly plausible. I still remain firm in what I told you when I first started doing YouTube and Twitter back in June of 2021, and that is that a stock market crash, very similar to what we saw in 2008, would lead to the mother of all short squeezes as over-leveraged hedge funds, prime brokerages, family offices, clearinghouses even get squeezed. It happened with Volkswagen in 2008. It happened with dry ships in 2016. And I'm not a financial advisor, and this is not financial advice, but there's a reason that I have hundreds of thousands of dollars invested in AMC and APE. There's a reason I just got back from my credit union to make another wire transfer. That's because I have the utmost confidence in Adam Aaron, the AMC board of directors, and the fact that AMC is shorted to high hell. Nance asks, what's the better buy, AMC or APE? Well, I can't really answer that. It's going to be a one-to-one conversion, so you really have to look at it for yourself and decide what makes the most sense for you. I'm not here to give you financial advice. I'm not here to tell you to buy, hold, or sell anything. If you're not confident in your investment, by all means, sell it and be on your way. I'm not here to hype people up. I'm just here to share the information that I've learned over the last going on 21 years of investing in the stock market at this point. I've had wins, I've had losses, but those fucking wins that I've had have been absolutely epic. Dry ships at one point was the most fun I ever had on the stock market. And AMC has come and made dry ships look like absolute garbage in comparison. I'm not fucking selling until they fire Janet Yellen. I'm holding until Citadel's folding. And what you're seeing right now, you're seeing Citadel and Virtue, the two biggest market makers in the world, take opposite positions of each other. They're finally getting to the point where they're not on the same side here. They're taking the opposite sides of the trade. And that leads me to believe we're getting to the position that you saw in the movie Margin Call, in which it's every man for himself. The cost to borrow doesn't lie. It can be dragged out. Things can be drawn out for a long time. But I've seen the last two times that AMC issued shares, it did not go well for short sellers. And it went really well for me. I appreciate your support. Make sure you guys go check out litxchange.com. There's no E at the beginning of Exchange, litxchange.com. As I told you guys, I'm selling my house. I'm leaving the Chicago area. I'm moving to Dallas. and I'm coming to scalp and poach the absolute best talent from the other broker dealers in the Dallas, Texas area. Why Dallas? Because Dallas is one of the financial capitals of America at this point. Dallas is the new Silicon Valley. Because fuck California. Chicago's turned into California light. And I have no interest in dealing with either one of those locations. So yeah, let's just say I plan to use a good percentage of the equity profits that I'm taking out of this home to buy more AMC. And then another percentage is going directly into Xchange because I have the utmost confidence in what we're doing here. And the reason that we've been working on it for over 2 years now is because this isn't some fly-by-night bullshit like Coinbase, where in a couple of years we're going to get sued by the SEC for operating an illegal brokerage firm, which is exactly what's happening to Coinbase right now. We're doing things right from the very beginning because I want to make sure that retail investors are well taken care of from now into the future. Xchange will be hiring in the near future. We'll be based out of Dallas, Texas. And I'm looking for a high rise. Let me know what we should name it. I'm thinking Xchange Tower sounds pretty good. Anyways, I look down at my watch. I realize I'm not wearing a watch. But I know that I've got a few minutes left with which to go buy some more call contracts on AMC, because I'm going to sell some of my call contracts for a premium as the price begins to run up higher and higher. And I'm going to use a percentage of the money that I make off selling those call contracts for significant gains to exercise even more call contracts, thereby bringing me into the six-figure shareholder whale club, causing gamma squeezes on the stock, forcing broker dealers and hedge funds to delta hedge, and creating even more fear of missing out buying. That is just a byproduct of my intentions, but my intentions are to reach 6 figures of shares, of actual number of shares in AMC and 8. I own AMC 1 call contracts, I own AMC call contracts, I own AMC shares, I own 8 shares. Tens of thousands of them. Tens of thousands. And I'm not fucking leaving. Storm is getting pretty hardcore out there. So I think it's time I call it a day because I've only got a few minutes left to go buy more call contracts. I wish you peace and wealth. Make sure you're properly hedged. Act accordingly. Thanks, everybody. Yeah, I'm still going to do lives. I've been doing lives this whole time. I've been traveling between Texas and Chicago multiple times now, over the last month and a half, as I've been looking at properties, as I've had my house up for sale. And I'll be more than happy to take you guys along for the ride as I, look for, as we receive our FINRA licensure, and as we actually begin to hire people and begin operations with Xchange. Anyways, we're going to be so fucking rich. I may be able to get things going way sooner than I ever imagined, just based off that moment, off that alone. Have a great day, everybody.